Welcome back to Investing Talk Podcast. Today we're taking a close look at Amentum Holdings. And the main question we're trying to answer is pretty straightforward. Is Amentum a good buy right now? Now, if you find this kind of analysis helpful, please do subscribe, maybe give us a like and drop a comment below. Seriously, if there's a company you want us to investigate for a future show, let us know in the comments. We really use that feedback. Okay, so Amentum, it's a big player, right? A mission-critical contractor focused on defense and government tech. The sources we've looked at lean strongly bullish, giving it an 8.5 out of 10 rating. So our job today is to figure out why. What in the financials, the recent improvements, and these contract wins makes the outlook so positive?
Well, I think the starting point is understanding Amentum's position. They operate in federal contracting, which, has really high barriers to entry. You can't just jump into this market. And their focus, it's on areas that are seeing structural growth, defense, intelligence, cyber, digital modernization. These aren't going away. They're deeply embedded with their clients.
Right, that embedded status seems key. And the numbers seem to back that up recently, like the revenue growth. They hit $8.39 billion for fiscal year 2024. That's up, about 6.65% year over year. Solid.
The revenue growth is definitely good, yeah. But I think the really compelling part of the story is the operational turnaround. I mean, look at the net loss in 2024. It was still negative $82 million. Okay, but that's a massive improvement, like nearly 74% better than the year before. That screams better cost control, getting things in order.
74% improvement, wow.
And crucially, if you look at the trailing 12 months, the TTM figures, they actually swung into the positive, about $52 million in net income.
Okay, so they went from significant losses to actually making money on a TTM basis.
Exactly. And that shift, that's really the core of the bullish argument, isn't it? The idea that the past inefficiencies are being wrung out of the system.
And that operational health ties into their stability, their competitive moat you mentioned. Talk about the backlog. The market cap is around $6.1 billion.
Yeah, the backlog is huge. They've maintained this $35 billion backlog. That gives them incredible visibility on revenue. A lot of this revenue is basically already locked in, thanks to their long-standing relationships with U.S. government agencies and allies. It means they're less focused on scrambling for sales, more on just executing the work they've already won.
Okay, $45 billion is a big number, but you said that visibility only runs through July 2025. For this kind of company, isn't that, well, a bit short for a security window? Does it maybe heighten the execution risk we need to discuss?
That's a fair point. It definitely puts the focus squarely on execution, yes. But having, roughly 2 years of revenue locked down in this sector, especially for a company that's been turning things around, is actually quite valuable. It reassures investors that the operational improvements we just talked about have room to breathe and flow through to the bottom line without immediate sales pressure. And that stability feeds into the valuation picture.
Let's talk about that valuation. The trailing PE is sky high, like 99.91, almost 100. But then the forward PE plummets to just 11.1 seen. That's a dramatic difference. What kind of earnings jump are analysts banking on to get that forward number so low?
Right, it looks jarring, doesn't it? Essentially, the market, or at least the analysts, are pricing in the idea that those past inefficiencies and losses are, well, truly in the past. That trailing PE is reflecting the hangover from those older losses. They see that $52 million TTM net income as just the beginning. They expect earnings to normalize, maybe significantly, bringing that forward multiple way down. And compared to peers in the defense space, a forward PE of 11 looks, potentially quite undervalued.
Okay, so the analysts are clearly buying into this turnaround narrative. The consensus seems strong, 7 to 10 analysts covering it, mostly rating it a buy, and their average price target for the next 12 months, somewhere around $28.22 to $28.43.
Yeah, that's the range. And that implies, maybe 13% to 20% upside from where the stock has been trading recently? These aren't just guesses either. They're tied to real, tangible progress the company's making.
Let's pinpoint some of that progress. What are the near-term catalysts driving this confidence? There was that big contract win back in August 2025, right?
That's a big one. The $4 billion contract to modernize the Space Force launch and test range system. That's a huge validation of their capabilities in high-priority, tech-forward areas for the government. Massive future revenue potential there.
And wasn't there also a divestiture around the same time?
Yes, exactly. They sold off their Rapid Solutions business. That brought in $360 million in cash, which is always helpful for the balance sheet. But strategically, it also lets them focus more tightly on their core, high-margin, mission-critical services. Less distraction.
And that seemed to flow through pretty quickly. The Q3 earnings for fiscal 25, reported in August, showed decent numbers.
They did. Revenue came in at $3.6 billion for the quarter, and they posted $10 million in net income. Off the back of that, management felt confident enough to actually raise their guidance for the full fiscal year 2025.
Raising guidance is always a good sign.
Definitely. And that brings us to a really interesting, very near-term tactical point. The ETF rebalancing coming up on October 18th, 2025. There's some chatter, speculation, that Amentum might get included in a major mid-cap defense index. If that happens,
Index inclusion means passive funds have to buy, right?
precisely, it forces buying from index tracking funds, regardless of the company's day-to-day news. It can create this sort of non-fundamental tailwind, pushing the price up simply due to those required inflows. So something to watch very closely around mid-October.
Okay, switching gears a bit to the technicals. How does the chart look?
Well, the stock seems to have built a decent base. We're seeing a pattern of higher lows and higher highs over the past, say, 6 months. Lately, it's been trading in the $22.65 to $25.27 range. That's comfortably inside its 52-week range. And importantly, the price is currently holding above its 200-day simple moving average, which sits around $21.88. That generally reinforces the idea of a longer-term uptrend being intact. But what's perhaps more interesting for timing and entry, maybe, is the 14-day RSI, the Relative Strength Index. It's currently down near 29.71.
Sub 30 on the RSI. That usually flags an oversold condition, doesn't it? Suggests maybe the selling has been overdone in the short term.
That's the textbook interpretation, yeah. Near or below 30 is considered oversold territory. So, technically speaking, the setup suggests that if one of these catalysts hits like positive news ahead of Q4 or that ETF inclusion, the stock is kind of coiled for a potential rebound.
Got it. Now, we need to be balanced. Even with the bullish rating and positive signals, there have to be risks. What are the main concerns investors should keep in mind with Amentum?
Absolutely. No investment is without risk. For Amentum, given its business model, I'd highlight two main ones. First is contract dependency. Because they work primarily with governments, a huge chunk of their revenue comes from a relatively small number of very large federal agencies. This creates risk around budget appropriations, the whims of Washington, D.C. funding cycles.
So, political shifts or budget cuts could directly impact their top line.
Potentially, yes.
Yeah.
Or even just delays in renewing major multi-year contracts. That concentration is an inherent risk. The second big one is execution risk. Management has effectively pitched this turnaround story, justifying that lower forward PE based on future performance.
They need to deliver on those expectations.
Exactly. They have to keep delivering on the cost controls, improving margins, and critically, keep winning these large, valuable contracts to make those growth projections a reality. If they stumble on execution, the market likely won't be very forgiving, especially given the valuation story.
Okay, dependency and execution. Makes sense. Now, let's step into the realm of speculation a bit. What's the buzz or the rumors floating around that might not be confirmed but could still impact the stock? Well, we've heard whispers about maybe more divestitures, selling off other non-core pieces to become even more focused. And then there's the perennial talk with companies like this, especially ones improving their cash flow, private equity interest. Any legs to that?
It's definitely plausible, and it connects back to what we discussed earlier. That $45 billion backlog and the improving cash flow profile make it look quite attractive from a PE perspective. They've done a lot of the de-risking work already, showing the turnaround is real. So a private equity firm might see it as a target with reliable government-backed cash streams that they could leverage up. It fits the classic take-private mold in some ways.
Interesting. And what about expansion? Any talk about moving beyond their traditional U.S. base?
There's some speculation, about potential international expansion, maybe a joint venture or a bigger push into the Asia-Pacific region. That would be a significant strategic move, diversifying their customer base away from just the U.S. government.
But even if those rumors don't pan out immediately,
Even without those speculative catalysts, the long-term picture still has strong structural support. Think about global trends. Governments everywhere are increasing spending on the exact things Amentum does. Critical infrastructure resilience, digital transformation in government, national security, cybersecurity, these are global priorities. Amentum's core skills in engineering and technology solutions are right in the sweet spot to benefit from these multi-year spending trends worldwide.
Okay, so let's try and wrap this up. Based on everything, the financials, the turnaround, the contracts, the analysts, even the technicals, that 8.5 out of 10 bullish rating seems, well, pretty well supported. It looks like there could be an argument for it, both short-term, maybe playing the catalyst like the ETF inclusion or looking ahead to the Q4 earnings on December 6th, and also as a longer-term hold to capture that sector leadership and operational momentum.
I think that's a fair summary. And maybe a final thought to leave people with. Something interesting just announced. Amentum is planning to create 3,000 new jobs. And significantly, a lot of that focus is specifically on boosting their capacity for UK defense work and getting involved in major UK nuclear projects like the Sizewell C power station. So the question for you to ponder is, looking ahead, how much of Amentum's growth and value will come from its traditional U.S. defense roots versus this potentially accelerating push into international markets, particularly the UK, and into big infrastructure and energy projects? Where's the balance shifting?
That's a great question. The future geographic and sector mix. Definitely something to think about. And as always, everyone, please remember this discussion was based on aggregated public data. It's purely for educational purposes. It is absolutely not investment advice. Always do your own thorough research and due diligence before making any investment decisions.